Hi guys, this is Wave 618. It's the 20th of July 2018 and we've just gone 11:30 AM BST. Now, we're going to do an update on Bitcoin today. I only did an update yesterday, but I would like to mention a few extra things. I've been analysing the chart in a lot of depth since, and I think it's important because, as I mentioned, we're at a very pivotal point right now. When you're at a pivotal point, you need to have a plan and you need to have a contingency plan. So we've already discussed what my plan is, obviously, in my last video, but we need to discuss an alternative should things not go quite right. And the more I look at it, the more possible a contingency plan could play out. So I'm going to talk a little bit about what that could be. And at the same time, I want to address a question that was asked by one of my YouTube subscribers, which was Kyle UCF is his YouTube name. And basically he mentioned that I've changed my primary account a couple of times with regards to the WXYXZ. So I have in the past had it like this, where this was W, this was X, this is Y, we're still to form X, the second X, and then we'll see Z. Now the reason I've changed it a couple of times, I've gone a little bit back and forth, is because of what price is doing in real time and using other indicators to determine where price is going to go to. So I did touch on it in, I think, a couple of videos back, but unfortunately the sound wasn't very good, so that might have been overlooked by a lot of subscribers. So I will address that in this video. But obviously, I'm very much of the opinion that we're still downtrending. And when downtrending, the two most important ways I believe in following the market is using pitchforks and moving averages. So I'm going to put a lot of attention on those. Until we see an obvious reversal pattern suggesting a move up, like a triple bottom or a big inverse head and shoulders or even a double bottom, then I'll start entertaining the possibility of a bullish move. But with these double bottoms, I expect much higher volume on these spikes at the bottom. Generally they form V bottoms, these reversals, and just haven't seen the volume there. So I've got no reason to think that price is, going to be bullish up to $50,000 from here. Absolutely no reason to think that. Now, the reason I've changed my count a couple of times with regards to where we put Y and the second X is because of this fib time estimate. So this fib time, essentially the way it's been plotted is it's from the beginning of the move up. So we're on the log chart, if you haven't noticed already. This is where this whole move up to $20,000 started, right here. It's following the retracement of the 2014 collapse. So it started there. And using our fib extension tool, the 0.236 is here. So this is where I felt that this was the soonest opportunity that Bitcoin could possibly start to show its last bottom and then start to turn upwards. And as we get closer to that, it means we slightly have to change our count. So previously I did say this was my count, WXYXZ. But keeping in mind, I was hoping that price would bottom around this 25th of August mark. I found it hard for X or X probably around here to form, because then it wouldn't leave enough time for Z to form that bottom around that time. For that reason, I was looking at the possibility of a WXYX and then Z around here. Okay, in terms of time. Now, this is what my plan has been with regards to my last video, but now we're going to talk about a contingency plan as well. And what I'd like to look at is, so this is, as I mentioned, a modified shift pitchfork. And we use that because, as I say, it was respecting this median line here. And then it was kind of respecting this upper median line, and that we're just testing the warning line here. Now that said, let's just go I'm just going to have a look at the shift pitchfork, which is just slightly different. And you can see here, this also has tested the median line. It's then tested the upper median line, now breaking the upper median line. And there's a possibility it could go up to test this warning line. Okay, so that's what we're going to possibly discuss in this video. The reason I want to entertain this possibility is because what happened in 2014. So this is the shift pitchfork, not the modified shift pitchfork. And again, if we plot it, we get a W, X, and then we get a test of the midline twice, where I believe we finished our wave Y. And then the second wave X actually doesn't quite reach the upper warning line. It breaks through the upper median line, doesn't reach the upper warning line because it's still showing weakness, rolls over, tests the upper median line, tests the upper warning line, and then retests the median line before eventually breaking out of this whole downward trend. Now, if we were to make comparison with what price is doing now, it's quite a bitter pill to swallow this with regards to Bitcoin, because it may suggest that rather than in my last video where I suggested we were around here, we may in fact only be here. And what we might see is price going a little bit higher, going close to this upper warning line, and then rolling over. That is what my contingency plan is going to be. So, and if we just zoom in on this one again, what we can see is there are reasons that it found resistance at this level and even this level. If we put the 1.5 and 1.75 on here, you can see it hits very nicely the 1.5, then it hits the 1.75 before eventually hitting the 2 here. So we could see a similar thing play out if we apply the 1.5 and 1.75 on here. So it could perhaps come up to around the 8,000 level, then hover sideways, and because of weakness perhaps might not possibly make it all the way up to the upper warning line and would then roll over. Having said that, if that was the count, I would be placing Y here, the second X around here, and Z I would have thought would come and test this upper median line level here around the 3,000. And that coincides with the 0.382 fib. And then you'd expect a bit of sideways consolidation and perhaps just taking off from the 0.618 fib right here. So a sideways movement here before it moved up. And this is around, I think, October, November 2019. So as I say, this is a bitter pill to swallow because we're all waiting for Bitcoin to fly. We all want that to happen. But this, if it plays out like this, we could be waiting, quite a while, at least another year before it makes its move upwards. But we have to be objective. We can't think about what we want Bitcoin to do. We have to think about what the chart's telling us. And personally, from a fundamental point of view, I wouldn't be that surprised if this played out. I mean, Bitcoin, as I believe, is going to be revolutionary in the way that it plays a part in our lives, as well as other cryptocurrencies, but there's nothing to suggest that's going to happen overnight. It's going to happen over the next decade, I believe. So these things don't happen quickly, and generally they need a good consolidation and retracement before they happen. So I wouldn't be surprised at all if price came down to these levels and waited until next year before really making its move. But yeah, so that's one way of looking at it. And another way, as I mentioned, pitchforks are very useful for looking at trend. Let's just clean up the chart slightly. Let's take up the 1.5 and 1.75. And if we just apply the moving averages. So I did mention on the daily, we've tested this 100-day moving average, and for that reason I was looking for it to start coming down. Sorry, let me just plot this. Sorry, back on our log chart. So yeah, simple moving averages. I mentioned that we've tested the 100 moving average. We may in fact test the 200 moving average if this fails. You know, what I look for, as I mentioned, my target initially was around 7,400, and I was happy for it to go up to 7,800. However, if we don't start to see a reversal pattern setting up, then I wouldn't trade it. So a reversal pattern being a head and shoulders, double top, triple top, anything like that on good volume, then I'll short. But otherwise, until we see that, it's difficult to short it at this point. Just going back to 2014, we can see here what happens is we get a WXY, and the second X tests the 200-day moving average. Now, in my last video, I was suggesting we were here, and we're just going to test the 100-day moving average. Now, it's still possible it can do this. We could perhaps be here, okay? In which case, we test the 100-day moving average, which we have done. It's wicked above slightly, and then started to come down. That's still possible. I'm looking for a reversal pattern before I play that. However, contingency plan is that we're actually, in fact, around this point, and price is at the 100 right now, but it could go up to hit the 200, hit this 1.5 level on the shift pitchfork, hover sideways to hit the 1.75. Doesn't have to do this exactly, but these are key levels. And then, if it does fail to hit this upper warning line, that suggests a lot of weakness, and it's going to come down a lot lower. So that's the way I'm looking at it so far. So if it does go past 7,800, this is the next price target I'll be looking at. What I'll be looking at is something close to it hitting the 200-day moving average, falling perhaps just short of this upper warning line here. Just using Fibonacci as well. We do a fib retracement from the first X down to the bottom of Y to see where the second X may come up to. It could be the 50% level here, the 8,700 mark. I'll be looking at something around that. So if 7,800 breaks, I'd then be looking for a reversal at around 8,700. We're testing the 200-day moving average, possibly testing the 1.5 on the shift pitchfork. And now just looking at volume. Obviously, volume is very important as well. So volume. So this is volume at price essentially. What it is it's a histogram where it divides price into a certain number of blocks. So you can decide how many blocks you want. On here there's 24. This is the default setting, and it tells you for each block in price, so from here to here, this is the volume of transactions that were made at that price level. So it's quite key, and the way I use it is it's a good guide to telling you where horizontal levels are in terms of where value was established. What I look for is a big transition in volume. So here you can see a lot of volume and then all of a sudden no volume. That means that this transition here is likely to be a horizontal support or resistance level. If we go across, we can see it's at this level here. Because generally where you see large amounts of volume, that represents consolidation, where there's either accumulation or distribution going on. And then where you see these low periods in volume, that's essentially where there's a breakout and price doesn't spend a long time at those price levels. Hence, it gives a low volume profile. It's kind of misleading because we look for high volume on a breakout, but volume at price is telling you how long it's spent at that price level, the volumes at that price level. So on a breakout, price spends very little time at a specific price level before it hits the next trading range. So for that reason, the breakouts will have low volume on the on these volume profiles. So that's what I look for. I look for these transitions. Now, the way I would look at it, I actually look at it quite differently. As I mentioned, there's 24 bars here, but I think this is misleading because it's not telling you what's happening between these bars. I actually change this completely and I make it 1000. And then you get these spikes like this. Now I'm going to remove a lot of the volume here, so it shows you the volume profile for all the data in the chart. So it's including price from here all the way to here. So that's all the data that's plotted on this histogram. You'll see it start to change as I zoom in now and remove this data. So you look at how the volume profile changes. Okay. Now I really just want to look at what price is doing really in this around this trading range. So that's the data I've got here. So we can see a spike here. This means there's a lot of volume at this price level. And then from here we've got where price breaks out. So the next real target, real horizontal or resistance line is around this 8,100 level. So that's where there's another very clear horizontal resistance line. And then there's a few more, so up to 9,300. I was looking at this mark here, around the 8,700 level, where price would be going up to. So there's a bit of a volume spike around this point. So I'll be looking for price to go up to around there. So that's just looking at a volume point of view. If we just look at net volume, that's another quite useful indicator. So we can see these big spikes. We saw a big spike in volume here. And what we see, net volume tells you whether the bulls or the bears were in control of the volume. So here there's a big spike to the upside, which means the bulls were showing the majority of the volume here. And as a result, price went up. Here again, bulls controlled the volume, price went up. Here you can see this is the lowest volume spike here. Bears were controlling the volume and price went down. So here we talked about how it was quite impulsive and there's a lot of volume, well not a lot of volume, but it moved up quite convincingly. But in fact the volume was no higher than recent volume spikes. So it's been hitting this level quite consistently. So there's no surprise here with the amount of volume that's come in. Alright, so that's just a little bit on volume, also supporting this move. Sorry this pitchfork keeps moving, it's because we're going away from the log every time I open up a new indicator. This is the chart I'm looking at. This is where I expect price to come up, test this. Sorry, my contingency plan is where I expect price to come up, test this 200-day moving average, probably around the 8,700 mark, and around the 0.618 retracement of this Y wave. Sorry, 0.5 retracement it was around here. So that's the contingency plan, to look for a retracement, price going up to this 8,700 level. And if price does do that, then we have to use this wave count instead. So a W, X, Y, X. And then Z, as I say, is going to take a lot longer to form. It's not going to finish here. The next fib time level would be, this is January 2019, and at which point I'd expect to see a large spike in volume to the downside, probably testing this upper median line before going sideways. So at the moment, we don't need to go down this route. We're still looking, well, I'm still looking for reversal patterns around this level. We've tested the 100-day moving average. But until we see a reversal pattern and a clear setup, I'm not going to go short. At the moment, price looks like it could follow the contingency plan, go up to this 8,700 mark, and that is certainly where I'd struggle to see how price could go any higher than that. Especially, I would not, if it breaks this line, for me, this is the last line that price could possibly still show that it's bearish. So if it breaks this line, I'd be deeply, deeply concerned. Just showing you how these pitchforks are really respected here. So on the log chart, so look how it stays below the warning line the whole time until it eventually breaks out and then continues upwards. Another example, this is on Mt. Gox chart here. We're looking on, if I come off the log chart, you can see, sorry, that wasn't the log chart. Just on the daily. So we're looking at this little spike here, ignore all these labels. Just focusing on this bit. Going on the log. So again, shift pitchfork. The shift pitchfork seems to be the one that is respected the most for Bitcoin, and that's why I've changed my pitchfork from the modified shift to the shift on where we are currently. So this is showing the shift pitchfork. And again, price, these are the first three pivots, and then price tests the lower median line, retests the median line, comes all the way down to the warning line, retests the median line, lower median line, breaks through the median line, progresses to the upper median line, and then even in fact breaks out the upper warning line before retesting it twice before continuing its trend. So these lines are very significant. They get tested, they act as support and resistance, and alone you can't trade them. You can't always say I'm going to buy and sell as soon as they hit the line. You need other indicators to support that move, but they give you a great indication as to whether we're following the trend. Again, the moving averages are so important. Price was really respecting this 200-day moving average before it eventually broke out and just continued upwards from there. And this was 2014. So our moving averages, again, they get really well respected. So as soon as it breaks the 200-day moving average, that essentially tells you that we've seen our final low, which was here. 200-day moving average was breached here, and then as soon as then it will start acting as support, as you can see. Yeah. So moving averages tell you a lot. Just the simple moving averages. So I hope that just gives a bit more information. It gives a contingency plan, which I think is important, because within trading, if you start to panic that price has gone past your price level, you'll start trying to validate your pre-existing plan by saying, oh yeah, it's just going to wick above and then it's going to close later. We'll give it until the end of the week, see what the weekly close is. We'll start trying to find things to support our trade, but sometimes it's better to just accept that if it goes past a certain level, you're not going to trade it. Yeah, because the probability of it being successful is lost. It's important to, let go of your ego and let that trade go, but then look for where the next possible trade could be. So that's what I've tried to do here. As I say, if this doesn't play out, I'm not in it at the moment because I'm looking for a reversal setup on the short time frame. So I'm talking 5-minute, 15-minute time frames. I'll be looking for those reversal patterns. If they don't happen and price just keeps going up, I'll be looking for this around 8,700 mark to get in on a short position. Again, looking for a reversal setup. If it doesn't happen, the last chance for it to be bearish is really when it hits this line. So in terms of timing, I'm looking at around 27th of this month. That's the final Friday of the month. So that will be when the futures will close. So always a lot of volatility around that time. So probably within the next week, I'll be looking for it to, if this doesn't hold, I'll be looking for it to go up to here by around the 27th mark. So yeah, it's just a bit of food for thought. So I've talked about pitchforks. It looks like Bitcoin prefers to follow the shift pitchfork. So I've reverted back to that. This is just our contingency labeling here. As I say, until this fails, we can still label it X, Y, like this. We can still look at this. However, if this fails, then we have to change it to how I just labeled it a second ago. So yeah, there are two alternatives. As price develops, we have to adapt and change the count. So just again, responding to Kyle on YouTube, I hope that just explains why I've had to change it a couple of times. And it basically depends on what price is doing in real time. So yeah, you've got to be flexible with the wave count. And it depends on how price is respecting the moving averages and the trend lines. All right. I don't want to repeat myself too many times, so I'm going to leave it there. I think I've covered everything I wanted to cover in terms of volume, pitchforks, moving averages, fib time, as well as Fibonacci retracements. Alright, so I'm going to wrap it up there, guys. Hope you're enjoying the content. Please like, subscribe, and share if you do enjoy the content. Alright, take care. Bye-bye.